Price action trading is trading based on the basis movement of the price and on the candlesticks that they are printing on the chart without any indicators. Now in this video, I want to go through price action fundamentals that will help us to stay on the right side of the market, and that will clear a couple of things up how price action moves. Now this area was the US stock market open, which would be 8:30 Central Standard Time, and the earliest I start trading is generally an hour and a half before the stock market opens. Now you can see it has been common theme lately that market is fairly slow before the open, and it generally picks up after 8:30 after the open. So the earliest you want to start, I would recommend, is hour and a half, possibly 2 hours before open, because during overnight session the volatility is not there, it can be slow, and you will be waiting for a lot of setups. Now before I start trading, I need to put my finger on the structure. I need to understand what kind of structure I'm looking at. And when I'm judging the structure today, I can see that we have a bearish move down. At the same time, we had a bullish rally, but the bullish rally is not substantial. So the structure immediately, I'm thinking, is bearish to trend range like. I'm not thinking about potential bullish structure, because this is all I would see. I wouldn't see anything after that. All I can see is a big move down, and I can see a somewhat of an uptrend. Now when I'm judging the structure, I know the price action is always following the rules, and there are patterns on the chart. There are always trend lines. So the first thing I want to do, I want to locate the proper trend line, and I'm going to use these first couple of swings. I'm just going to copy the trend line, put it at the bottom, find my trend line. I'm using the first few swings to help me identify the channel. I have a break for the channel, and I have new low form, which tells me that this downtrend played out and I can expect reversal. Now I'm going to pay attention to the exponential moving average, because this will indicate reversal. And notice I'm still judging the pre-market structure, so I don't need to think about this too much. All I'm going to do is to draw my channel like this. And the reason why I'm drawing it wider like this and not tight like this, because once we have a break in new low, I expect reversal. I would draw it tight like this if this correction would be part of the bigger downtrend. So I can see that we have an uptrend working higher. We have a break. We have a first leg to a new extreme, pullback, second leg to a new extreme, telling me that this uptrend played out. And this uptrend, notice how it barely made it to the middle of the initial downtrend. For that reason, once I see this uptrend over and the main pattern was down, I'm still leaning with bearish bias for the most part. Of course, I'm going to mark my low of the day. You always want to mark your highs of the day and lows for the day, but there's no point for me to marking the high of the day right now, because we are way far away from the high of the day. So there's almost no point in marking that. Only if we get closer to that and we start approaching it, that's where I can mark the high of the day. Now, so I'm following the trend line rule. You guys can see how price action works. So I'm going to draw a wider downtrend at the same time. And notice what we have. We have first leg down, pullback, second leg down. And we have a new high, first entry long, pullback, second entry long. So this is a two-legged pullback. Now, second entry long is a high probability setup if it forms under the right condition. But is this the right condition? This is not the proper condition, because uptrend played out, so I'm not looking for longs. If anything, I'm looking for shorts. So this right here is a first entry long, pullback, second entry long, failure. It is a failed second entry long. It is at two key entry points, the trend line and exponential moving average, and this would be a first high probability setup for the day if you start trading. Now notice what happened next. Prices broke the trend line, and I expect for prices to create new extreme. So I'm looking for high probability setup. I'm looking for two-legged pullback, and I can this time take a second entry short because the trend is down and I still need to get new low. So we have a new low form. I always reset the count after a new low is made, and I have first entry short right here while it triggered below this bar right here, a little correction, push higher, and a second entry short once we trigger below this bar right here. Second entry short trigger right here. It will work for a scalp. It is at the key entry point, but it is right at the open. And also I wanted to see EMA reject prices. Once this big bullish bar formed and it managed to push slowly and surely above EMA, this told me that something is not as I expected. And even though this worked, I wouldn't necessarily recommend this entry, because it's getting a little bit congested, it's getting a little bit sideways, and is right around the open. So you always want to be careful around the market open. And after open, prices are pushing above EMA. So this right here is starting to definitely look like a trading range structure. There is no clear big trend. There's a move up, move down, and move back up again. And notice this is the first leg. I'm just going to copy it. And we have second leg to a new extreme, and market likes to move in pairs of twos. So as I can see that this is starting to look like a trading range, I can find a potential resistance. When I was watching this, I had my resistance slightly higher, but what I should have done, I was supposed to pull my resistance a little bit lower. In that case, I get more touches around this area because this is the very high of the move and you don't get that many touches. If I pull it slightly lower, I had more touches right here. For that reason, when I was watching this uptrend playing out with the break and new high, remember the trendline rule, and I see big two legs up, I see that we are at the top of the trading range, but I don't want to sell just yet. We have a new low formed, first entry short, pullback, second entry short, and then we had a lower high that confirmed the resistance and a nice strong bearish reversal, but there is no bullish momentum at this point on. This would have been a great entry. Unfortunately, I had my resistance slightly higher, but if you were able to identify the trading range, this is now a lower high confirming the double top, and you're playing the trading range, so you expect to go down, and overall, this was the first leg down, so you're expecting bearish bias. Remember my initial analysis, it was somewhat bearish into a trading range, but still the main pattern, the main bias is still somewhat bearish. Now notice what is happening. Prices just took off and they never looked back. Now a high probability setup would be a failed second entry long, just like this. New high, first entry long, pullback, second entry long below exponential moving average, but there is no failed second entry long below exponential moving average. I just have to sit here and let this go without me, but I cannot force an entry. There is no pullback and no failed second entry long. So what I can do, I can draw a shortened channel. And notice what is happening. Prices are not even pushing above EMA. This is just one big swift move down without any correction inside of this. So this is telling me that this momentum is very strong. It is not zigzagging. So I'm not particularly looking for buying the breakout just yet. I don't want to fade the breakout back into trend range, excuse me. I'm definitely not looking for selling the breakout because we're at the support, but I'm not looking for fading just yet because this was a very big move down and we're still yet to reach the exponential moving average. So this is telling me that this is quite a strong bearish downtrend. And in fact, once prices are pushing lower, this is where I'm going to use these few swings as they are forming geometrical formation. Notice these highs, how they are forming geometrical formation. All of these highs are sloping lower, and I'm going to copy it and draw a wider channel once we're pulling lower like this. Now at this point on, when I'm looking at the structure, this right here is confirming my first analysis of the bearish bias. So what I'm going to do, I'm going to draw a wider pattern. I'm going to use the last pivot of the trading range to help me identify a wider channel. And when I was watching this live, I used these two swings and I extended the downtrend like this just to see if it's going to come into play or not, because the bearish momentum is really starting to look strong and the bias is definitely bearish. Now, what I can do, since there are measured moves in price action, this is the first leg, pullback, second leg, and I can expect for market to reach the second leg down, the bigger measured move. So this is for the most part my main target, and I'm sticking with the bearish bias. However, as prices are pushing lower, I cannot just sell a random entry. I need to sell a high probability setup. And a high probability setup is a second entry short at the key entry point or failed second entry long. Now, we have the lowest low right here, and we form first entry short, little pullback, second entry short. It is at the key entry point, so this is great. Also, this downtrend just had a first break, so I expect for it to create new extreme. But the signal bar is horrible. This is no good bearish momentum. This is a doji with bullish body, so I cannot go short here. And there is this big bearish bar, which there is no trigger below, so there is no entry here. So there is a second entry short, but I cannot enter this because the signal bar is not confirming the bearish momentum. What can happen? You can get burned. Also, this is a little bit advanced. Even though this is technically not double bottom because double bottoms reset the count, this looks very close to being a small little trading range, small little consolidation, and I can actually reset the count here. If I'm a little bit more advanced, I can look at it as a first entry short, pullback, second entry short. First leg up, pullback, second leg up. Do you see the two-legged pullback? The high probability setup, it is with the direction of overall trend. It is at the EMA, and notice, uptrend played out with the break and a new high, and this is the big bearish bar confirmation of my momentum. So this right here is a great high probability setup following all the rules of the price action we talked about. So you're just following the price action. You're not guessing. If you don't see a high probability setup, you're not taking an entry. Now, prices pushed lower, created a lower high, but you just had to break a new low, but prices kept pushing lower. And as I was watching prices consistently pushing lower, this is where I drew a spike and a channel pattern, something like this, because it really looked like we may have a stronger downtrend. So this is the highest high where I reset the count. I always reset the count after two-legged pullback at the key entry point. And notice what we have. New high, first entry long, pullback, second entry long. This is the first entry long, pullback, second entry long. Again, market likes to move in pairs of twos. Now, why am I looking for second entry long? I'm not looking for second entry long to buy. Oh no. I'm looking for second entry long to fail. Because two-legged pullback with the direction of a trend is a high probability setup at the key entry point, but against the direction of a trend can be considered a trap. And once we form this bearish bar, this right here is a failed second entry long, and this was my first trade for the day that I took. Quick, easy scalp. It's a little bit aggressive because you're quite close to the lows. You still have room to here, but when I was watching this live, this looked more bearish. And I thought we were going to continue pushing lower. So this was good enough for a scalp. Quick, felt second entry long. It ticked higher, it's reverse down. Great, fast momentum. Now, as you can see, we have a strong rejection to the upside. So I'm going to redraw my shortened pattern. And we have a break and a new high. This is the first leg, pullback. This is the second leg. Market likes to move in pairs of twos. For some of you who are new here, it may be difficult to see at the first glance. But you can see that the market truly likes oftentimes to move in pairs of two. So in order for you to understand this, you just need to get a little bit more experience, but it's just a matter of time. So the bias structure still hasn't changed. I'm still looking at wider pattern. We still keep creating series of lower highs, lower lows. This uptrend played out with the breaking new high. And notice what is happening. This support right here is now acting as a resistance. We're truly trying to test it. We're barely coming close, and we have a two-legged pullback. And right now I'm watching if we get pushed below EMA. I'm not particularly looking for long entries because uptrend played out and overall bias is bearish. So if we push below EMA, that is going to confirm my initial bearish analysis, and I can take a high probability setup. And notice what we have. We have a new high, we have a strong push below EMA, and we have a low high entry. It ticked higher, instantly reversed down. And I took this entry on engulfing, and this was my second trade for the day, lower high, because we pushed strongly below EMA, confirm the overall bearish bias. Now my runner got stopped at break even, and later on we went into this consolidation into the smaller the trading range. Now you're very close to these lows right here, and you have to be patient at this point. Once you see EMA getting in all these bars and all these bars stacked, this is where you cannot take any entry. And I was done after two trades like that. You can see that the price is right now going sideways. I'm going to draw the short-term uptrend. Can I go long? It is tempting to take new low, first entry short, second entry short failure. It is very tempting because we're coming off to low, strong push above EMA, but given the overall bearish bias, it is a little bit too early. But notice we have a break new high, and notice where the prices are finding resistance. At the previous support that you identify at the first minute when you sit in front of your chart, this is the low for the day, and the trend line that you were able to identify very early as well. So this is how you operate, and this is where you predetermine the places on the chart where prices will turn. You don't need any indicator, you just need to train your eyes to follow the price action. So once we are bouncing here, I still am thinking bearish. We push lower. However, I cannot just pick a top like that. I want to see potential lower high or failed second entry short. So we have new high, we have a first entry long, the failed lower high, but you cannot go short here. This is gigantic bearish bar, a lower high triggered below this bullish doji. So same issue right here. I cannot go short here, and I cannot go short here again. So only chance that is left for me right now is a failed second entry long. And we have new high, first entry long, pullback, second entry long. A lot of traders are going long directly into the major key entry point under bearish bias. And right here, there is a high probability setup, failed second entry long. It is a little bit more advanced because it kind of pushed above. It managed to close below EMA. It is a little bit big. But what is great about this entry, remember, you reset the count after two-legged pullback at the key entry point. And there is new low formed, first entry short, once we trigger below this bar right here, little tick higher, and the second entry short. So this is at the same time fell second entry long and a second entry short entry, kind of like a visual fell second entry long, big leg, big second leg, and a first entry short, second entry short. Now all you're thinking about is you're at the key entry point, not just one but two, and right here you strongly push below EMA, and what you have a confirmation setup of the second entry short or the visual fell second entry long. But look at this signal bar is a little bit neutral. Look at the stim at the bottom. Had this bar closed a little bit more bearish, this would have been no-brainer, lower high, just like this, confirming the analysis. I will mark it for educational purposes because next time you will see this, it may be much better signal bar, but it's confirming the key entry point. It is below EMA, and lower highs are confirmation setups. If you're afraid to go short just here because it's acting a little bit weird and it's above EMA, you wait for prices to push below EMA, and then now you have lower high confirmation setups. So this is a little bit aggressive because there's the signal bar, and then you have felt second entry long, but it's already way too close down and went too close to these lows. You want to have felt second entry long closer to EMA with room to this support. Now notice what is happening. Break of the major downtrend, new low formed. So are you thinking bearish? You're not thinking bearish at this point on just yet. You just had a break and a new low. It's getting a little bit squeezed. The trend line is here, the support is here. It's starting to get wedgy, and this is where you have to be patient. You don't want to be taking late second entry short because you already have break and a new extreme. And prices are strongly reversing up. You can draw a wider channel because we're expecting a potential reversal. This is no longer just a correction, and we actually have new high formed, first entry long, pullback, second entry long. Now I will mark it because this is a nice entry because a lot of traders took a lower high directly into EMA after new low was formed, and you strongly push above EMA. So it's a two-legged pullback, second entry long of two key entry points, and you're right now in the process of reversing because after new low you expect reversal. So I like this entry. It's a little bit advanced because you need to, I mean, it's not that advanced, but you need to be a little bit skilled to be able to recognize the reversal so quickly. But it's a nice bullish bar of two key entry points, first entry long, second entry long, and market is pushing higher. Now notice what you have. We are pulling back lower. I'm going to draw my shortened channel. I have a break and new low. When I was watching this live, I was leaning more towards prices pulling back into trading range. Why? Because if I'm going to zoom out, the major bias for the day was still remaining bearish. This was the main bias, and we traded down into this trading range, and this trading range is bigger pattern overall compared to the smaller pattern, and the bigger pattern is taking precedence. So we have a break new low. I'm not looking for a second entry long at this point on to create new high. You may be wondering, will we create new high? Well, we can, and I keep that in back of my mind. Of course, I don't want to go short just yet, but in order for us to get second entry long to create new high, it needs to push above EMA. The fact that you're below EMA and below this resistance now is confirming my initial analysis that we may get reversal pattern. But notice what is happening. If I want to take failed second entry long, it needs to close below this EMA, but it didn't. There was a strong bullish momentum bar like this, and you would have to sell once it pushed strongly above EMA like this. And this is confusion. Do I expect new high or do I push below EMA? When I have this doubt, I wait. I wanted to take failed second entry long, but it needed to push below EMA and close form below EMA. Once it pushed strongly above EMA like this, this is telling you something is different in price action, and you need to be a little bit careful. So at this point on, you want to be careful. It's getting a little bit stacked. There is new low, first entry short, second entry short, which would have been great entry had it closed with better signal bar. It is also a continuation of failed second entry long, but unfortunately you cannot take this entry. Very tempting entry, but you just need to watch market go without you. There is a wider pattern which had a break and move to a new extreme. All right, so this is how you play this area where you have confusion whether you expect new high or you expect for prices to pull back into this trading range. You're focusing on the bigger pattern, and this is the trading range, and main pattern was down, and you push below EMA, so there is no reason to look for longs because all the key entry points are forcing prices to form and close below for the most part. Now we had a break and new low, and notice what we have. We have a first leg up, pullback, second leg up. We have a second entry short, two leg up pullback. And when I was watching this live, I even drew my channel like this, and we have a first entry short, second entry short, an uptrend played out with the break and new high, and you're coming from the highs of the trading range all the way down to here. So this right here is definitely a good trade to take a chance on, and you guys can see what would have happened. It would have ticked lower and instantly stopped you out. But this is just one of those trades where if you took this trade, you didn't do nothing wrong, you're following the rules. Of course, half of the fact you can find many reasons why not to enter, but when you're watching this live, you're forced to think on your feet. And if you put all the pieces together, you expect move to the bottom. You don't really know that this is the proper trend line with the break and new low, because you can even make it slightly wider like this without the break, and it fits also fairly nice and it's confirming the channel. So this was tricky trade, but the main reason was that this looks like a first leg down, pull back, kind of like a second leg down, and you have a break and new low. So this is the main issue with this. Also, you can have a potential overshoot if you draw it a wider pattern, but this is definitely an entry worth taking a chance on. Also, the body closed far away from EMA, which is another little nuance here. But if you took this trade right here, you're definitely following the rules, and trading is about probabilities. And if you're taking a chance on entry like this, you're doing great. Now, at this point on, structure is trading range, which means that in trading ranges, I'm forced to follow shortened channels, and I'm forced to monitor imbalances. Imbalances are important because they're going to tell me which breakout is going to work and which breakout is going to fail. As of right now, I see prices strongly pushing back up, and the bullish imbalance is just starting. We didn't reach the lows here, but prior to that, it was a healthy trading range. So this is not just fully developed bullish imbalance just yet. For that reason, I can take potential entries off the highs. You guys can see if I move the resistance slightly higher, you can play with the key levels as the price action is developing. So there's nothing wrong with that. And at this point on, I can see that the resistance is holding prices nicely. So my focus is on waiting for break and new high and taking entries. This entry right here is tempting, can be considered decent. Then we have strong push below EMA lower high. I will actually mark this entry lower high, confirming the resistance. Strong push below EMA, great bearish bar, but it is getting a little bit congested, a little bit consolidation. It's getting a little bit sideways. There's a small little trading range that formed after, and this overall EMA bars, as this is getting very confusing. This is the area on the chart where you want to be patient, you don't want to force any entries, but so that you understand, you have to focus on taking short entries off the highs. You don't want to be going long just yet. Prices are attempting to push lower, and notice I'll keep drawing the shortened channels, break new low. First leg down, second leg down. Market likes to move in pairs of twos. And right now we're pushing strongly above EMA, but the same story right here. EMA in all these bars, this is sideways movement. Everything is going sideways at this point on. I can just find another basically congestion, and this is pure gambling. You really shouldn't enter in the middle of trading range if you can. You want to wait for prices to reach the extreme. So nothing is telling you that this is a good setup in here. Everything is screaming at you that you're supposed to be patient, because you follow the rule. You want to avoid congestions and you want to wait for prices to reach the extremes. But here's the important thing. If you're looking at trading range, you need to look at the imbalance, okay? And I can see that the prices failed to reach the bottom here and is consistently failing to reach the bottom, which is indicating to me that there's a bullish imbalance. Healthy trading range is supposed to go from one point to the other, and there is no bottom that is being reached. There is a gap here at the bottom tier of the trading range indicating bullish imbalance, and this is important. That means that the breakout may work and you don't necessarily want to be fading the breakout. And you guys can see it truly did break to the upside eventually, and prices strongly reverse up. So what I have to do, I have to redraw my channels again, and I have a break and I have multiple legs to a new extreme. Now, unfortunately, there is no setup for me to capitalize on taking a long entry. As strong of a structure as this is, I cannot see any two-legged pullback to exponential moving average. Everything is far from EMA. Everything is first entry long. So we traded up strongly without a chance for me to enter, and I have to be content with that, because the next time you will take a first entry far from EMA, I guarantee you it will pull back and you will get stopped out. So this was the area on the chart where there's particularly no good entry to take. And you just have to be a mature trader and you just have to be patient. Now, we had a break move to a new extreme. This was extremely steep uptrend and this is very unnatural. So you definitely expect deeper correction, and there was a straight up reversal. What I'm going to do, I'm going to redraw the channel. We have a small little double top. So I'm going to reset the count there, and I'm going to treat it as a first entry long, pullback, second entry long failure. But it is so far away from EMA. Even if you treat it like this, new high, first entry long, second entry long failure, it's still not touching the EMA. You cannot go short below bullish bar. And by the time you get this big bearish bar, it's too far down. It's way too big of a risk. And the same story, just like to the upside. Strong move up without any high probability setup, and strong move down without any high probability setup. Notice, we're not even touching the EMA. Second entries far away from EMA. First entries, not a great high probability setup. Now, once I see such a strong bearish move down, my bias is right now bearish. I expect for prices to reach the low of the day, the support. But I cannot just draw wider pattern just yet. I have a break in new low and we can reverse from here to the upside. So what I need to do, I need to respect this correction phase, and only after we strongly push down like this is where I can reanalyze the structure and I can see multiple legs to new extreme, and I can draw a wider pattern like this. So this is the wider pattern and no high probability setup. Far away from EMA, everything. We have new low formed, first entry short pullback, second entry short, once again far away from exponential moving average, and we're going to extend the main support. You guys can see that it's coming into play. I have to follow the shortened channels. We have an overshoot, which means that the overshoot for correction is probably not going to get a new high. We have a first break over the downtrend, so you expect to get new extreme. You expect to get a lower high because you have a new low, first entry short, second entry short. You know, this is not such a horrible entry because you have the overshoot, so expect strong momentum in opposite direction. But this is definitely not the easy high probability setup. You expect to get lower high, which came lower high, but I managed to push above EMA with such a doji. This would be a very aggressive entry. If this goes below EMA, this is 100% great entry because you expect new low and it's a lower high confirmation of second entry short and the structure is bearish. But like this, you need to be careful, and unfortunately there's no high probability setup on the way down. And then you have new high, first entry long, pullback, second entry long, where once again you just now reached the new low for the downtrend. EMA keeps holding prices, and this downtrend was fairly strong, so you know what, I'm going to mark this entry as a failed second entry long. But once again, it is quite advanced because once you have a break in new low, you need to be a little bit careful. But given the fact that this structure was so strong and is a failed second entry long, you can't expect another push down. It's very reasonable given the size of this trend. It was really strong. And after new low is formed, notice what happened. You reset the count, multiple matching lows, push above EMA. Difference between here is already indicating potential reversal. You don't want to buy low just yet, and then you have a first entry short, pullback, second entry short, failure. This is a reversal pattern. Downtrend played out, strong push above EMA, at the EMA, and a failed second entry short, high probability setup to close the day. Of course, this is way too late. This is after market close, so you don't want to be taking this entry. But this is first entry short, pullback, second entry short. So this was the video about price action fundamentals. You're following the price action rules. You're putting all the pieces of the puzzle together. You're only waiting for high probability setups. And you can see that sometimes the areas on the chart are a little bit slow and stacked, and you have to avoid these areas. And once you see prices going without any high probability setup, you have to be okay with this and only wait for high probability setup, as there were good high probability setups early on. I'm going to wrap it up. I'm going to see you guys in the next one. Take care, everybody.